Borrowing private money with Erin. So first off, why private money? There's usually a couple reasons that people pursue private money as opposed to a traditional lender. Maybe you have issues with your DTI, your debt to income ratio, meaning that you're spending more money than you're bringing in. Maybe you've already gotten your 10 loans that a bank will allow you to have. That's essentially the magic number. Banks are only going to give you 10 loans. So that could be 10 for you, 10 for your spouse, or 10 for you, 10 for your business partner. So once you've reached that capacity, you can no longer leverage money from the bank. Then you might look at private money. Also, maybe you don't have income to show. Banks are going to require that you have income because they're going to make you guarantee the loan and make sure that even if that property doesn't make any money, you personally can cover the note. And so if you've just started a business and it hasn't been running for 2 years, or maybe you're commission-based and it's inconsistent income, or maybe you're retired or just living off rentals and you haven't had them for 2 years, the banks aren't going to consider that income. Private money lenders don't care about how much money you make. They don't care if you make $1. They'll never ask you for your tax returns, your W-2s, your 1099s, any of that stuff. They're going to underwrite the property based on the performance of the property and the potential of that property, as opposed to you that a traditional bank is going to look at. So what do these loans look like? So there's a couple different options. You can do a fix and flip loan, which typically is a 6 to 12 month loan. And that's going to include the purchased price and the renovation for that property. Most lenders are going to give you 70 LTV. So that's 70% of what the property will be worth after you renovate it. So let's say ARV, or after repair value, also known as market value, is $100,000. You can then get a $70,000 loan. So that means you could purchase the property for $50,000 and put $20,000 into that property. And that gives you enough wiggle room to refinance. Then you're going to refinance into a 30-year loan. Back to the fix and flip, those rates are going to be anywhere between 7.5% and 12% interest only. You're paying interest only. That's annualized. So if it's 12% interest, you're going to pay 1% of the loan every single month as your interest only payment. You're not paying down any principal. Then you're going to refinance after the renovation is done into a 30-year loan product. And those typically look like, right now, anywhere from 3.75 to 6% interest, depending on your credit score. These lenders typically will run your credit, but they're not going to originate the loan on your credit. So you'll get a credit inquiry on your credit report, but you won't get a new loan originated on your credit report. So it shouldn't affect your credit by more than 2 or 3 points. And any inquiry within a 45-day period is considered one inquiry. So if you already have pulled your credit with another lender, if you pull it with a private money lender within that 45-day period, it's only going to count as the same inquiry because they will let you essentially shop for a mortgage. So 30-year loans, those are fixed rate and they're amortized. So you're going to pay principal and interest over that period. And then there's also bridge loans, which allow you to stabilize an asset. So if you renovated a property and you want to make it an Airbnb, but you don't have any income to show on that Airbnb, then you can get a bridge loan, which again is an interest-only loan, somewhere between like 7 and 9%, 1 to 2 year term, and it'll allow you to stabilize that asset. So then when you go to refinance it, you have income to show and you can get a great 30-year product. Because we're underwriting the properties based on the performance of the asset, you need them to be stabilized. And so as a long-term rental, you just have to have a lease in place. There's no seasoning required. You can refinance out of your private money loan the day that you get your lease in place. So that's enough to show income. If it's a short-term rental, then you will have to show income. And if you can't, you will either only get credit for the market rent, which an appraiser will put on an appraisal addendum, or you will get, you will have to stabilize that asset with a bridge loan or some other loan product until you can show the income. You can use the seller's income if the seller's been operating the property as an Airbnb or a short-term rental. You can use that income too. So down payment requirements. Typically for a 30-year loan, 1 to 4 doors, you're looking at 20% down. 5 doors or more, it's going to be 25%. For a fix and flip loan, it could be 0 to 15% down. Some lenders will do 100% financing up to that 70 LTV. As I was telling you before, someone will even go up to 75 LTV. And again, that's 75% of the final value of the property. If you're going to BRRRR it, as in buy, renovate, rent, refinance, repeat. So if you're buying it to renovate it and then turn it into a rental, they'll give you a little bit more wiggle room on the front side when you purchase. So that will be 0 to 15% down. A lot of times experience plays a role. And then in terms of points, private money lenders use the term points, which is what the traditional bank would call a origination fee, and those could be anywhere from 1 to 5 points, and a point is 1% of the loan. So typically you're going to look at 3 points. So 3%. So if you're getting a loan for $100,000, your fees will be $3,000. You're also going to pay some other fixed fees to close that property. You're also going to have to pay for an appraisal, which is done by a third party. And then you will also have to, on top of the title fees, or on top of the lender fees, you'll have to pay title fees as well. So quite a few fees. I'll share all those with you as we go through the process. So how do you actually initiate this process and get a loan, or even decide to figure out what your loan options are on a property? First, you're going to apply using this link right here. Fill out your application, and then I'm going to send you an email, ask you for some more information about the property. I'm going to ask you for your credit score. Then I'm going to send you pricing. You can take a look at that pricing. There's multiple scenarios you can get. You can do 0 prepayment penalty, up to 60-month prepayment penalty. You can do different terms, lots of different scenarios. So you're going to decide which one you want to pursue, if you want to at all. If you decide to pursue the loan, then you're going to send the contract over. If you're doing a refinance, you're going to send the closing docs from the original purchase. We will order the appraisal and title work while you send us all the documentation that we need, which includes leases, property management agreements, bank statements. We want to make sure you have enough in reserve to close the loan. Then all the title work will get done, the appraisal will get done. We will lock your loan, send it to underwriting, and then close on the property. And it is that simple. So again, apply here. If you have any questions, feel free to reach out to me, Erin at bcglobalinvestments.com. I'd love to work with you. Bye, guys.